week, I've been doing my best to break through the gloom and doom with a more constructive attitude. Because when virtually everything sells off, you tend to get some incredible bargains. But only assuming if you know where to look. After today's rally, I think you have to agree with me. But the market's still very oversold, which means, barring postings, we could have more room to run. So tonight I want to highlight some of the hardest hit stocks out there. The recent IPOs that have gone from the hottest stocks in the market to truly hideous performers over the past month. Whenever people get terrified, they ring the register on all sorts of good stocks, and that includes pretty much anything that recently came public. That's really where they go. Of course, we only want the best ones, which is why I'm sticking with Cava Group, Reddit, and Viking Holdings. Cava Group, Reddit, and Viking Holdings. Because I think you're getting an incredible chance to buy all three down substantially from their highs. Why don't we take them one by one? Let's start with Cava Group. That's a Mediterranean restaurant chain. Came public in June of 2023. Cava started out real hot, but then had a multi-month cool-off period. I started recommending it in the low 30s back in November of 2023 after Cava's chairman, Ron Shaich, formerly of Panera Bread, convinced me that it had the potential to be the next big thing in casual dining. Now, this stock then marched steadily higher through most of last year, ultimately peaking at $172 last November. That was after Cava reported a tremendous quarter, and its share shot up 19% intraday before pulling back and finishing up less than 2%. Now, it is never good when you see that kind of rally. That's called a pirouette. You got to steer clear of those. Sure enough, this one's been pulling back ever since, trading down to the mid-70s, although it caught a nice bounce today along with the rest of the market. Still, Cava's been more than cut in half because it's right in the center of the blast radius. It's a restaurant. It's a recent IPO. It's got an expensive stock, even after the sell-off. None of those are what you want if you're worried about the consumer confidence figures that everyone else seems to be. I never recommended this stock because I thought it was cheap, though. I like Cava because I think it's an excellent long-term, what we call regional to national story. They had 367 locations at the end of last year. Their stores are doing very well, and they've got a ton of room to expand from a regional to national player. Oh, that's right, go all over the country. And for the record, Chipotle stock was never cheap either. I don't see any signs of the concept losing momentum. When Cava reported its latest quarter, it delivered 21% same-store sales growth, for heaven's sake. Now that the stock's down 55% from its highs, you got my blessing to start buying Monday. And if it keeps falling, you know what you should do? Buy more. How about some others? Okay, Reddit. That's the online message board website that I've liked so much since it came public. Major player in online advertising space. Stock's going from being red hot to freezing cold practically overnight. I started recommending it last May at around $50. By December, it shot to 153. That's where I suggested that you had to start taking something off the table. Although Reddit kept climbing to 230, where it ultimately peaked just over a month ago. Since then, the stock's going straight down. It's falling over 50% in a month, reaching a low of 105 and change on Monday before rebounding to the high 120s as of today. Remember, this rally today encompassed a lot of these kind of red-hot stocks and also some stocks that I don't really care for, the quantum stocks, the electric stocks, nuclear utilities, you know what I mean. Just like with Cava, Reddit hasn't done anything wrong. Last month, they reported a terrific quarter. Revenue growth accelerated all the way to 71%. The problem here is that this is exactly the kind of stock that people dump whenever we get hit with a market-wide meltdown. It's almost programmed. The only scenario in which I get more bearish on Reddit's fundamentals would be if the current period of macro uncertainty turns into an outright recession, because a recession would really hurt their advertising business. In a recession, anything that depends on ads does get crushed. But I don't think we're headed for a recession, which means Reddit's pretty darn enticing now that the stock's practically been cut in half. Right now, this thing's selling for, these numbers are going to make you freak out a little bit, don't. Selling for roughly 58 times your year's earnings estimates, 39 times next year's. Okay, it's not crazy for a great regional national story. I've seen this over and over again. Plus, based on the way that Reddit's been beating the estimates, I wouldn't be surprised if the stock ultimately proves to be much cheaper than it looks right now, if only because the future earnings are likely to come in higher than expected. Again, as long as there's no recession, as long as this thing continues to be able to spread and grow, not just from this nation, I should say all over the world, Reddit's a winner, and I think it is going to be very big internationally. Finally, one more quick one. Viking Holdings, the parent company of Viking Cruises, which is a cruise line best known for its European river cruise routes and its upscale, sophisticated market positioning. By the way, remember when Royal Caribbean was here and they were talking about doing river cruises? These guys own this market right now. They're going after a particular kind of customer, though. Hence why one of their slogans is no children, no casinos. You know exactly what you're getting here. Now, I recommended Viking Holdings the day after it came public on May 1st, back when the stock was at 27. Regular viewers know I am a big fan of the cruise lines going for one in May. They represent a great value, and Viking's a unique player with an impressive focus on rich American baby boomers. We watched with glee as Viking stock glided higher and higher and higher throughout last year and even the first few weeks of 2025. Eventually, it peaked at $53 and change in early February, just before the market-wide sell-off. Since then, the stock's fallen back to 40, down roughly 25% from its highs just over a month ago. Again, like I explained when I told you to buy Royal Caribbean on Wednesday, the cruise lines are different from other travel plays. They represent incredible value versus traditional vacation alternatives, especially if you wanted to drink heavily, and that's still true of the upscale Viking cruises. But for Viking in particular, we have a fresher company-specific catalyst. On Tuesday morning, the company reported an excellent quarter with inline revenue and an impressive 9-cent earnings beat off a 36-cent basis. No one paid any attention to it because of the market-wide sell-off. Management also has some very positive commentary about the full-year forecast, with CEO Torstein Hagen noting that the company was growing capacity for its core products by 12% this year, delivery of 11 new ships. They're already 88% booked for the 2025 season. So it sounds like smooth sailing for Viking at present, and we got this update after the tariff reign of terror had already started. With the stock down meaningfully to the point where it now roughly trades at 17 times this year's earnings estimates, I think it's another one that's worth buying right here. Now, here's the bottom line. Even after today's rebound, tons of stocks are still so far down from their highs, and I think we've reached a point where you can hunt for opportunities in the hardest hit names, assuming you stick with the best operators. And therefore, I think things like Cava Group, Reddit, and Viking Holdings. They came down the hardest, and assuming we get through this, they're likely to bounce back the hardest, too. Let's go to Austin in Massachusetts. Austin.
Oh, yeah, Jim. Love you, brother.
Yeah.
Thanks for having me.
Thank you. What's going on?
Jim, I caught Palantir under $10, and I think this stock, similar to Palantir at the time, is grossly overlooked and misunderstood. They've got real American manufacturing innovation, major production expansion, and recent $6.5 billion government financing it for a Georgia plant. They just crossed gross profitability per vehicle sold. They've got a low price to sales multiple of 2.2x.
All right. You got me intrigued.
They're dropping quad motors, Jim, in 2025 that run 0 to 60 in 2.5 seconds with 1,000 horsepower. They're
Inconceivable.
Also growing FSD. They're also growing FSD, and their founder RJ is a strong leader with an impressive
RJ Scaringe, that's the hint that you wanted. Yep. If we were playing Jeopardy with David Faber, we'd be getting clobbered. Okay, I know this is not what you want to hear, but I don't care for the balance sheet. If they had a better balance sheet, then I would say fine. I know they've gotten some money from others, but it takes a long time to go public. People misunderstand how long it took for Tesla to be able to get there. And Tesla had, it had a whamma jamma musician at the top of it. And these guys, Scaringe is good, but I do worry about the financing. But I'm so not done with questions. I feel like going to Bill in Massachusetts, just my own thing. Bill.
Jimbo, I'm a proud Cramerican and proud club member. Can I just take 1 minute and say a couple of things? I love being in the club. It's the best club I've ever been in.
Thank you. How about yesterday when we stuck our neck out in the absolute middle, the teeth of the sell-off? Thank you. Okay. What do we got?
I don't even know. I can't even say enough. It was a pleasure meeting you, Jeff, Regina, and your staff is so kind to an ignorant old man. It's just incredible.
Well, that's me when you speak of that. I will tell you that I love the club, and I'm so excited about the fact we got the meeting coming up, and that's going to be fun. I'm looking at Regina Gilgan. She's doing so much to make the meeting great, all the little nitty-gritty stuff, and she's so excited about it.
It was a pleasure to meet her. She's an awesome person. She really is.
So's her mom and dad. Her mom and dad are dynamite, too. All right.
I'll tell you, Jim, I was so happy this week. I was able to open up a position in Costco and Netflix in the 800s. I was so happy.
There you go.
Oh, I'm ecstatic. I just wanted to ask your opinion on GE Aerosmith. Can it take more share from Boeing or Howmet? How do you think they're going to do?
Oh, man. Okay. I think the answer is they can take a ton. And you have to buy it and buy it like mad, because what's going to happen is there's going to be so much servicing of these planes, and that's where they make their biggest money. And don't forget, you're getting Larry Kolb, who's one of the greatest executives in America. Okay, at this stage in the sell-off, I think you got to start buying some of the hardest hit names. Many of these new IPOs went down hard, which means they can bounce back hard, too. Much more mad money ahead. Jeff Marks and I took a crack at all your burning questions yesterday during the monthly meeting, but we didn't get to all of them, so I'm circling back. Then my exclusive with a private beer company that's been bucking the trend of higher prices. And of course, all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.